Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for October the 19th, 2011. Now, to get started, our first position for tonight is going to be in December S&P 500 futures contracts. Now, what we're looking at here is selling a rally. Now, we have a lot of volatility in the markets right now, a lot of optimism over what's happening in Europe, but there's really nothing in Europe to be that optimistic about, to be perfectly honest. So what we're going to do is use this relief rally higher to sell. Now, looking at our predicted short, medium, and long-term differences from Vantage Point, we can see that they're moving into overbought territory. We've had a rally up that's been for basically the S&P 500 has rallied approximately 11%, I think, in the last several weeks. This is a big move. This is unlikely to continue in my respectful opinion. You can see these lines that I have drawn here. The sell-off in the S&P 500 pretty much comes at the same time every month, and that's usually towards the third and fourth week of each month. Now you can see we're approaching this now, and we're hitting up against this resistance line. So for tomorrow, what we're going to be doing is looking basically to use the Vantage Point daily report as our primary tool to get into a counter trend or trending short position, depending how you look at the current market. Now, looking at what we are going to do is bring up the short-term crossover from Vantage Point. We can see that a short-term crossover is all tangled up right around this trigger. My opinion is it's going to make one more push higher, and then we're likely to move lower. Now, looking at things, let's bring it down into our daily report. We can have a neural index is up, so we should expect a rally somewhere towards the 1234.70 area, at which time we're going to use that to set our short positions, and then I would expect a return back under the 1200 mark within the next, probably in the next few days, probably even less than a week. But our intraday trades, we're going to use this 1234 area as an entry point to go short. 1204, excuse me, approximately around that area, I would look to exit this trade also, because we could still have the bulls could still come in and the buyers could come in right around that 1204 area. So if we're getting in around the 1232, 1234 area short, we're going to look to exit probably around the 1208, 1209 area, just to be safe. Your more aggressive traders, they can hold that short, and like I said, a medium term perspective probably back towards the 1190 area. Now, again, what we're going to do is come back to the Vantage Point charts here, and we're going to bring up the predicted high and predicted low. Now, the red line is the predicted Vantage Point predicted high for the day. The black line, the predicted low. Today, we've had the last 4 of the last 5 days, we've pushed through the Vantage Point predicted high. This again screams of a significant retracement lower. We've had a rally end of day based on things that are happening out of Europe. But again, for every good thing that happens in Europe, there's a bad thing that follows. So keep that in mind. So these rallies are usually very short-lived. So with that said, again, we're going to be looking at that 1232, 1234 area to set shorts, targeting 1209, and then we'll see how it looks towards the end of the week if this is a position we want to hold longer term. Now, that's our first position for tomorrow. Now, our second position is going to be in the dollar-yen currency pair. Certainly a week will not go by where I will not put out a long trade on this particular currency pair. We remain running completely flat on this particular currency pair, with our indicators basically warning us of a potential break higher. Now, if the equities do break higher, then the dollar-yen will clearly break higher. But if the equities don't break higher, the dollar-yen is going to continue to trade in a range. This, in my opinion, is the likely outcome. So looking at continuing trading the current range, let's have a look at the crossovers here from Vantage Point. Our short-term crossover is down, our medium term is up to flat, and our long-term up to flat. So basically there's still an upward bias. So from here we look for the predicted MACD, the predicted TSI. They're fully supportive of this trade. Predicted short-term difference slipped below the zero line, but the predicted medium and long-term difference is still remaining somewhat net positive. So much like our S&P 500 trade, we are going to the daily report for assistance in doing an intraday trade. For tomorrow, we have 76.58 for the low, 77.16, excuse me, for the highs. Neural index is down, so we can expect the market to move lower from where it currently is at 76.80. And when it gets down to the 76.58 area, we're going to use that to set our long positions. Our target, 77.16. Guys, we've been trading in this range for a very, very long time, and there is no reason why we shouldn't be trading this pair basically every day. We'll be looking at booking anywhere from 15 to 60 pips. There's not going to be a big dramatic move here, I don't think, this week. So we continue to play this range, and this is what makes Forex very, very attractive, is that as long as it remains in this very, very tight range, you know, your more aggressive traders, they can sell the top towards 77.40. Your other guys that are on the long side with me, they just continue to buy at 76.50. They close out at 77, 77.40. We're going to continue to play this. There's nothing on the horizon here, excuse me, that is suggesting that the dollar yen is going to break out on either side. So we are going to continue to play this and use the Vantage Point daily report to assist us with that. When we look at the daily report to bring it into perspective, you can see that we have far more upward breaks than downward breaks. In the last 4 trading days, we have broke the upside twice and we have broke the downside twice. Actually, we're completely flat on this. So this is what I'm saying, is that it's a reasonable intraday trade. In my opinion, pretty low risk. Our stops 75.50. Stay out of that broker radar. And we always keep those limits to a maximum of 77.40, because this pretty much seems to be the area. If I just quickly draw this line in here, you can see that there's a lot of resistance just up in this upper band. So for now, we're just going to continue to range trade this, and I think it remains a very reasonable trade. So with that said, these are the market positions for October the 19th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.